and so off and rolling. Okay. All right. So we're out of both JD and Procter and Gamble, and running here with those. Okay. All right, the fill price on JD $1.70, not the zero that went out. And what is on the spreadsheet here is the correct data for the exits, and we can come down here look at the orders, and you can see that we got the $1.70 fill, and we got the 375 fill, and we are out of both Procter and Gamble and JD. Okay. And these are both, just hey, they hit their auto exit date. One hit it on the green side, one hit it on the red side, and so out of both here. And a $450 gain to start the first week of the challenge, where the market very choppy, hasn't really gone anywhere. Just a lot of different stocks, very choppy. So not a lot of trend development that has come in here with that. Okay. Alrighty. Let's see here. Before I move on, let me make sure everything is done and dusted as far as this is concerned. There are no new signals here this afternoon. None. EOG was really close. In fact, I thought for sure it was going to trigger on the bear side here. Was very close, but did not trigger. So there are no triggers here this afternoon. The market vibe is neutral. We saw it switch to neutral yesterday, and it's sitting at neutral here today as well. Today's option expiration, right? And, option expiration Fridays, where I stand. I hate trading them. I always have. I think there's some day trade opportunities in them, but making big fund managing decisions or swing trading decisions, a lot of times they're just not great days to look at and say, wow, okay, my signals are in play and let's go. And one of the reasons is the chop. Now, today we have seen some chop in the market, but it's been driven by a lot of news. And a lot of trade war stuff, from the U.S. versus the EU to the U.S. and Canada and Mexico to the U.S. and China. And it's a lot of trade news, a lot of those winds swirling out there, and creating some of the activity that we see. You see some stocks, they're down really big. Other stocks, they're holding up really well. And even in the same sector, we have Microsoft green, Adobe red, Microsoft green, Google getting hit hard. We have Apple red, but Tesla, well, there's some news on Tesla. Tesla getting absolutely crushed here today. But nothing too abnormal when it comes to option expiration. Micron down 3%, AMD flat. This isn't very uncommon when it comes to option expiration, and we see it kind of playing out here again today. And why is it? Well, a lot of decisions they're made based on exposures, based on protection expiring, based on factors that aren't fundamental, based on factors that aren't technical, based on factors that aren't gain and loss related or news related. They're just factors of exposure. When we get to those times, a lot of times we'll see the chop be very heavy with that. Not always. Option expiration days, they're one of two things. They're either choppy and all over the place, or they are really quiet. Today is one of the choppy, all over the place types of days. And from time to time we can look at option expiration days, and there can be major pivots on those days. Today isn't one of those. Where we're talking about, well, a big sell-off is ending or a big rally is ending. So ultimately, Monday morning market will come, and it'll be driven by whatever the U.S.-China rhetoric is this weekend. As far as the gap, but keep in mind when you look at when you look at past sell-offs in the market and things like that, the overnight futures traders oftentimes are not correct, and oftentimes get hammered. And the where the market gaps loses a lot of its correlation to where the market ends by the end of the day when we get in a choppier, more bearish style environment. When we're in a much more bullish environment, it means a heck of a lot more. The gap, is oftentimes the move. We saw that all April, right? The gap is the move. And, outside of that, there's not much movement. But when we get in choppier environments like this, the gap is, a lot of times reversed in a big way. In fact, some of the worst days in the market history have actually happened on gaps up in the market, where we have woken up, we've seen the market gap up, and then just get hammered. So, keep that in mind as we go forward. I do expect the volatility to, maintain itself as we get into next week. If we start to see it compress a little bit, if we start to see the average true range on the market shrink down a little bit, start to curl on down, it's been on the rise here. But we start to see the average true range, fall. We'll be talking about a more sustained rally, but we are coming into an area where, to see some resistance start to come in. I've talked about this 2,900 level a little bit here this week, but, there's no real confirmed bearishness for the market to say, hey, you know what, it's now time to sell this rally. But, if we see Monday, big pop up, and, Tuesday, some sort of erasure of that, market could be in for a little bit more. But again, a lot of things to, a lot of things for the market to sort out there. Okay. Alrighty. So that's the first week of the challenge in the books here. And we'll go into the weekend with cash and take a look at where things are Monday morning and what's triggering, and we get an entry. We'll look to run with that early Monday morning. Thanks for hopping on. Have yourselves a fantastic weekend, and we'll talk to you Monday. Take care.